All right, settle in. Because today we're pulling back the curtain on a secret so colossal, it makes most conspiracy theories sound like bedtime stories. For decades, the biggest banks on earth didn't just control money. They rigged the price of money itself. Forget oil, forget gold, forget crypto. We're talking about the fundamental cost of borrowing that dictated your mortgage, your student loans, even your government's debt. It was called LIBOR, a number so profoundly powerful it silently steered $350 trillion across the globe. And for years, unless you worked in high finance, you'd probably never even heard of it. This isn't just a story about a financial benchmark. It's the tale of how the world's most crucial economic indicator spiraled into its biggest, most audacious lie. Welcome to The Financial Historian, where money, power, and history aren't just colliding, they're exploding. And trust me, nothing is ever as it seems. Every single morning, like clockwork, a simple question landed on the desks of bankers in London. If you borrowed from another major bank today, what interest rate would they charge you? 16 of the world's financial titans, Barclays, JPMorgan, Deutsche Bank, UBS, Citigroup, each sent in their answer. The highest and lowest submissions were tossed out, and the average became the official LIBOR rate for that day. On the surface, it seemed elegant, efficient, a paragon of financial cooperation. But there was one gaping, fatal flaw. It was built entirely on trust, not on evidence. No one, absolutely no one, verified whether those reported numbers were genuine transactions or just educated guesses. And in a system perpetually fueled by the pursuit of profit, trust became the easiest, most potent weapon imaginable. LIBOR wasn't some obscure ticker for financial institutions. It was the invisible pulse of the entire global economy. It set the rates for millions of mortgages, student loans, credit cards, and even the bonds governments issued. It was, in essence, the heartbeat of money itself. And then that heartbeat started lying. Inside those gilded towers of banking, a quiet, insidious realization began to spread. If a minuscule tweak in the LIBOR rate could shift trillions of dollars, then whoever controlled that number held the reins of everything. It started subtly. Traders, seeing an opportunity, began to whisper to their colleagues in other banks, "Hey, could you possibly nudge the rate down a bit today? Just a tiny fraction?" A knowing wink, a casual favor exchanged, a few decimal points lower. And when that day's rate was averaged, billions of dollars would move, silently, invisibly, from one pocket to another. The traders, with their insider knowledge and their whispered requests, cashed in. Everyone else, the ordinary people trying to buy a house or pay for college, bore the hidden cost. They called it adjusting the fix. We, looking back, call it manipulating the world on a scale that beggars belief. By the early 2000s, what began as quiet individual manipulation had metastasized into open, organized collusion. Traders across continents, nestled in their high-rise offices, started coordinating their moves through secret, encrypted chat rooms. They gave these digital hideaways names like the cartel and the mafia. Their messages, when eventually exposed, read like scenes ripped straight from a dark crime comedy. "Can you move 3-month LIBOR down a tick today?" One would type, "Sure, mate. You owe me a bottle," another would nonchalantly reply. They literally joked about fixing the fix, all while orchestrating movements of billions of dollars that profoundly impacted people's mortgages, their pensions, and the national debts of entire countries. This wasn't the work of one rogue trader gone bad. This was a deeply ingrained global culture of deception, meticulously organized and impeccably dressed in suits. Then came 2008. The global financial system, already teetering on the brink, finally cracked under the crushing weight of bad debt. Banks stopped trusting each other, liquidity froze, and panic spread like wildfire. But admitting this truth, admitting that the major banks were too scared to lend to each other, would have been catastrophic. It would have triggered an even deeper, more devastating collapse. So, they lied. They continued to report artificially lower borrowing rates, painting a false picture of stability, desperately trying to project an image of health when the patient was clearly in cardiac arrest. LIBOR, the supposed thermometer of financial health, consistently rate a comfortable 98 degrees while the underlying system was hemorrhaging. The world's trust meter had flatlined, but no one in power dared to say it out loud. Regulators, overwhelmed or complicit, largely looked the other way. Governments, prioritizing calm over truth, allowed the illusion to persist, and it held precariously until it simply couldn't anymore. The year 2012 finally brought the dam breaking. A courageous cohort of whistleblowers and tenacious journalists shattered the silence that had protected this scheme for so long. Barclays, facing overwhelming evidence, became the first to admit its guilt in manipulating LIBOR. And when they did, they handed over those infamous chat logs, a treasure trove of incriminating evidence that read like a darkly comedic Wall Street sitcom. "We all did it," one Frank banker reportedly admitted, and he wasn't wrong. UBS, Deutsche Bank, Citigroup, JPMorgan. One by one, the giants of global finance fell under intense investigation. The fines eventually totaled a staggering $9 billion, an astronomical sum, yet still mere pocket change when compared to the unfathomable profits they had collectively siphoned off through their deception. A handful of traders faced jail time, becoming the sacrificial lambs in a system far too vast to imprison. But the system itself, the overarching culture of greed and manipulation, it survived. Because you can't arrest a culture. LIBOR, the architect of this colossal deception, was finally retired in 2023, replaced by a new benchmark called SOFR. It's supposedly safer, more robust, built upon real, verifiable transactions. But here's the unsettling truth. Many of the same banks that manipulated LIBOR are still submitting the numbers for SOFR. The same powerful incentives to maximize profit, often at any cost, remain. And that pervasive culture, the one that prioritizes profit above truth, still rules the roost. The LIBOR scandal was never truly about obscure interest rates. It was at its core about trust, the fragile, essential foundation upon which every loan, every investment, every paycheck, every financial transaction rests. And when trust becomes an optional luxury, when it's seen as something to be weaponized rather than upheld, then corruption becomes not just a possibility, but a routine expectation. The LIBOR scandal didn't conclude with explosive crashes or dramatic arrests. It ended quietly, almost imperceptibly, with spreadsheets, with decimal points, with polite, institutionalized deceit. A global crime disguised as business as usual, because when you control the benchmark, you effectively control the world. The traders involved didn't need to break the system. In a very real sense, they were the system. And perhaps the most haunting truth of all is this: it never truly stopped. It just changed its name. Because history, as we've seen countless times, doesn't repeat itself identically. It reinvents. The next LIBOR is already out there, quietly operating, hidden in plain sight, waiting for the next generation to blindly believe the same old comforting myth, that markets are inherently fair, that numbers are always objective, and that money itself is a neutral force. But behind every rate, every chart, every dollar sign you see, there is always a hand, invisibly, subtly, deciding its true price. If this deep dive into financial history gave you a new perspective, do me a huge favor and hit that subscribe button. Because history never truly hides the truth, it just buries it deep beneath layers of convenience and illusion. And here at The Financial Historian, we make it our mission to dig it up. Thanks for watching, and I'll catch you in the next one.